Welcome to another YouTube Live Traders. We'll be going over many different asset classes today, going over gold, silver, oil, as well as the gold-silver ratio, and some other indexes, SPY, as well as the US dollar. And then also, obviously, Bitcoin and some of the alts here that we are potentially looking at entering. Not really looking at that right now, but first let's go to gold like always, go to the commodities and then the indexes, and then we will finish off with the cryptocurrencies. So we're going to get some coffee and then we'll make our rounds here. But first, before we do any of our TA, we do like to kind of start off with the news topics. Where do we find our news? We find it within our Discord, absolutely free to join. It is in the news section. We have a bot that automatically posts any interesting, relevant news topics involving cryptocurrencies. So that is where we're getting all of these news topics here. So the first one is going to be the banking shutdown drives crypto adoption among Venezuelans. So what's happening is the Venezuelan banking sector is shutting down indefinitely, which means obviously if you have any funds in there, you can't take them out. And if you have any funds, you can't put them in. It's a complete lockdown. So what do you do, right? What do you do if you're in that situation? How do you send money? How do you receive money? And this is where cryptocurrencies come into play. And also, one other thing to note on Venezuela, because they had also the major hyperinflation, if you don't know. I don't exactly know how much inflation they had, but let's quickly Google it. They had some crazy inflation. Let's look here on the images. All right. We can see on this right here. Oops, let's just make it into that inflation spike. Look how much inflation that is. 1.3 million % up. We don't exactly know when, but even just back from, I guess, Maduro's election, this election right here. So like late 2012, it's up 1.3 million %. So we already see massive difficulties with the currency itself, because obviously if you held it from here to here, you just lost basically your entire value of the currency. And then you're having banks shut down. And then one other thing is looking at the transactions taken place for Venezuela. We can see right here. We can see basically every other country: USA, United Kingdom, Ukraine, Turkey, Tanzania, Switzerland, South Korea, all these countries, right? You can see the peak is at 2017, every single one. The peak is basically at the end of 2017, start of 2018, when Bitcoin was at just under 20K for almost every single one. Peru is surprisingly not, but on average, we can see the major countries are all kind of centered towards 2017, end of 2017 being the highest point of the amount of transactions you see. Right now, you're seeing during the hyperinflation was the most amount of transactions in Venezuela. So you're seeing a flood of people using cryptocurrencies in order to try to get themselves away from the banking sector, to get themselves away from the hyperinflation that's going on within their native currency, which could lead to, obviously, a complete shift where they drop the native currency altogether, and then almost an entire nation just kind of comes together and agrees upon the use of cryptocurrencies, which is very interesting because we're already seeing kind of the worst case scenario in Venezuela with hyperinflation. We are talking about the banks printing tons of money, and anyone who is a gold bug or a crypto bug will be hot on this topic as well, because obviously Bitcoin's value is its ability to have a system that regulates the inflation, regulates the supply that is being created, and then at a certain point there will be no supply because all the Bitcoins will be mined. So and other cryptocurrencies have different protocols and whatnot. But at the end of the day, having the ability to control the supply and having a fixed supply will inevitably beat out the fiat currencies in the end. So then this could be something that we can see in the future, and it's very promising seeing cryptocurrencies get adopted and get used in places like Venezuela when they do have hyperinflation. So in that said, that is our first news coverage here. The next one, quickly talking about Hawaii launching digital currency sandbox to attract crypto firms. Not going to go into this one too much. Read into it if you want. But it's really good to see that there is more adoption, especially from governments and whatnot, so crypto investors. Also, some interesting things about the tax. So Canada is the same. You can now push your your tax return, or basically send in your tax later on, because everyone is suffering from this virus. So basically just wanted to inform everyone that the taxes are changed in your country, so you probably might want to check it out before you file them. I don't exactly know how each system of tax works for every single country. That's kind of being broad, but probably wherever you live, there's going to be some change in your tax because of this virus, because of the lockdown. So definitely check it out before you file taxes. And then that's about it. I do have one more, but it's not too relevant in terms of cryptocurrencies. One last thing we're going to discuss is the actual numbers for the coronavirus. We have increased the numbers here, so we have over 222,000 confirmed cases, unfortunately. And wow, this jumped up quickly, so it's almost at 10K here. Yeah, that's a huge number. Looking kind of globally, we can see obviously it's. I think they made the boxes smaller. I think they did, because it used to be it looked a lot more rampant, but now I think they've minimized the dots because it's growing at such a large scale that everything would be red if they kept it at that same scale. The final thing we're going to be looking at is the actual number of cases in other locations. I think this is kind of what matters more. It's great to see that China has been basically completely mitigating all growth of the virus and spread of the virus, so they are controlling it, seems like. Obviously, we don't exactly know if they're going to be true numbers or not, but it's good to see that the total recovered is increasing. China has steadily almost declining, it looks like, which is really great to see. Hopefully, the other countries that are implementing the lockdowns will follow soon in its footsteps, and then the total recovered will continue its trajectory, and we'll be able to kind of go through this without too many more deaths here. But yeah, it's definitely very scary. I hope everyone is okay. Give your loved ones a phone call. It's always a good thing to do. Stay safe out there. Don't really know what else more to go on it. I'm not really a health professional, so can't inform you of anything regarding how to help. But now with the news done, we will now go into the commodities here. Gold is going to be the first one. We're getting a really, really tight range here, a tight consolidation in a very well-respected zone. So this is going to be the 1 hour chart. We're not really going to go into the 4 hour or anything. The simple things we have to understand, this zone right here, 1550 is going to be a key level of resistance that we need to pass. We can see it was a previous level of support and resistance. So that's going to be the main structure, or else if we hit it, we're just going to still be in consolidation, probably going to be testing this support again if it does bounce off. So we'll see if that occurs. But overall, what the expectation, if we do break this zone here, we'll be looking for a potential pullback on this zone. So if we break, we're not going to be really looking for enter. If we push up here, we're going to get a pullback at this previous level. We can see it's been a level in the past, so it's probably going to pull back, test this previous resistance as a new level of support, and then a potential entry here to your first take profit of around 1550. If it breaks above that, you're looking phenomenal. Obviously, we are on a very bearish trend here. But at the end of the day, if it does break this zone, if it validates it, if we're getting double bottoms and we see buy pressure within the market, that would be looking pretty good. But we don't want to jump too far ahead here, and we want to kind of play it day by day because there's so much volatility, there's so much news that happens. We don't want to give too much bias as to what may happen in the future, and we kind of want to take it one step at a time. But for now, that's gonna be what we're looking for a potential long. We got this ascending trend line that gave me a little bit more of a bullish indication, but then we held this level of support. So now we're in a pretty tight range here where we got a zone right here as well. So basically, if it breaks this zone, like so, as long as it holds this support here, even if it comes down like here, I'm looking at the market in a more bullish sentiment. Now, if it breaks that support, that's a different story because then we're making a clear lower low. As we can see, this is a lower low, and then we'd be looking for a lower high structure. It might not be perfectly at the previous support, but we are looking for that lower low, lower high structure, which is going to be something like this. And then a potential double top with pin bars or a bearish engulfing candle. You could have something like this where it pushes down and then it pulls up a couple times. So it creates a bit of a flag pattern or a wedge or an ascending triangle or something that provides you with an ascending trend line that allows you to find a good entry while limiting risk. So you kind of have a good idea where the sellers are going to be coming in, where you can manage your risk if it does go the other way, where you can kind of say you're wrong because that's important. You have to understand when you're going to be wrong if you are wrong. So that's the idea for gold, which will then kind of go into our silver trade because it does look a little bit similar, holding that same structure of a support. So same thing, except in my opinion, silver is the front runner because we've already broken our second. Oh crap! My mouse might be running out of battery here because it's really not wanting to click. All right, so we got our first descending trend line. This was on the 15-minute chart, and it was a squeeze. I wasn't really looking to enter, but it was a squeeze nonetheless, and if we broke down, that definitely would break this zone. But as we can see in historic timeframes on the 1-hour chart, as well as the 15 when we go into it, support, we get wicks to the downside, but candle closure at that zone, candle closure at that zone, and then we're getting now wicks again on the same area. I think it was around $12. And now we got to push up. We got a validation of a previous support and resistance. As we can see, it's pretty well respected throughout the chart right there. And then one thing I don't love is we do see more sell pressure than buy pressure within the volume candles. Theoretically, you could say that that is a no supply on the way down, but we'll see how this candle closes. If it closes in a bullish engulfing candle with more buy pressure, that would be a no supply, and I'd be really interested, and I think that our bias would be long for our first, that was a really poorly drawn line, for our first level of resistance, which would be here, which is a zone of sensitivity, and then we got our structural supply zone, which is going to be right here. So right now, we are just in a trading range, so we have to understand that we are in a trading range, but saying that, we are in a bearish momentum move without any pullback to this $14 range. That's the key thing that I think that we are going to be getting is right now the price is obviously around the $12 range. I think the $12, $11.9-ish, $12 range is exactly where we are. And right now, how I see the market is this range up here and this supply and then demand. So we could be looking for a potential long in around these zones. Stop loss here, take profit would be somewhere here, but we might get an over exaggeration or an overextension to our main level of supply, which is going to be a retest. I think there will be a lot of sellers here because A, the overall market is very bearish. B, very strong level of support. We've tested this multiple times and then we broke through without any pullback and we consolidated here. I think we're going to get a pullback and then potentially the next leg down. So we'll talk about that on the larger time frames, but just wanted to give you a good understanding of what's happening within the consolidation. So it's looking like a possible entry here for TP1, and then maybe an extension to around the $14 range. But it's looking pretty good. And then we're seeing some higher lows here getting a squeeze, and it already broke this zone. So it's looking more favorable here for the upside. And then we're going to talk about the larger time frames now. Want to see that 1 hour close because a bullish engulfing candle there would be great. If it pulls back again and then we get a bearish candle closure on this 1 hour chart, we could then see another potential no supply if the next candle is a bullish engulfing candle with more bullish pressure than the previous red candle. So we'll see on the VSA. We know that this is a strong level of support, and looking back at the daily or even the weekly here, I think the weekly, we can see very, very strong level. So remember, that's that consolidation we're in right here. And as we can see, we're holding a very strong level of resistance with the anchor point right here. We see our first reaction at that zone, and then we see 1, 2, 3, 4, 5 rejections all around that area. So we know that descending zone is very well respected to the downside. There's probably going to be sellers at that area. And then looking horizontally, that $14 range, like we said, first wick here rejection, and then it came back down. We got a squeeze, we pop back up. Exact same thing. We got a wick here, we got another squeeze, we pop back up, and then we crushed down after all that mess that happened with obviously the market's in complete fucking panic crazy mode. So it makes sense that there's massive volatility. Every single asset's down. Bitcoin, gold, S&P, every index, basically, you name it, is down a significant amount, and everyone's just in panic mode. Everyone's going to the dollar. We'll talk about the dollar a little bit later, which we'll get into. But just to finish off silver, we made a push to the downside. We got no pullback, no exhaustion, no market breath, absolutely nothing here. And that's what we're waiting for here. And we're not going to pick an exact bottom. We have to wait for market structure on the 1 hour and 15, like we said. But it looks pretty favorable. We are holding that nice structural level of support around $12. So in terms of the daily, you know, we got a pretty nice clean area here. So we see a wick, and then we see the price try to push further down, trying, and it's not. Let's just look at the volume, because I don't know why it's not on here, but it's, I guess provided by the, no volume provided by the data vendor. Okay, well, that's a little odd, but we can look at another one a little bit later. But basically, we're getting a push to the downside, and we're getting attempts to try to get the push beyond $12, but we're not getting it. And then now we're getting a potential reversal here back up to the $14 range for the retest. So we'll keep it on the 1 hour chart, but it looks a little bit more bullish in my personal opinion. A little bit more than gold, because silver already broke the descending trend line, whereas gold has yet to break this descending trend line. So it's still not yet broken the price action pattern of the descending triangle pattern. Not going to talk about the gold and silver ratio too much, but we see it did peak at over 127. Crazy. I think it's the highest point it's ever been. I don't exactly know in terms of long-term thousands of years of history, but in terms of anytime recently, it's the highest it's ever been. And like we're talking about, we're looking for a break when silver exceeds the appreciation of gold. That's when you know that the tide is shifting. Because I look at silver as being more speculative and more volatile than gold, and I think that Bitcoin is more speculative and volatile than silver. So then when the gold and silver ratio shifts like this, when we saw that huge push from silver, I'm kind of looking at Bitcoin to be doing something even more exponential at that similar time, because just in terms of the psychological shift from potentially the US dollar into safe haven assets, because at that time the psychology of the masses might think inflation is going to happen. It could be. Looking at how much money they printed, I know that everyone's rushing to the US dollar right now, so it's seeing a tremendous amount of strength. The US dollar is overpowering basically all currencies, and it's creating a problem. But everyone's rushing to it, and we'll talk more about it a little bit later. We'll go into crude oil here. That $22 range did end up holding up. The last time we talked about it, the daily candle was basically at $20, which we were basically at the low. We did come back up and close the daily candle right at our descending level of support. And we'll zoom out and talk about it right now on the weekly. So this is that zone that we're talking about. We got our first interaction back in 04 of December, and then we got our first touch point in January of 2009. Little bit iffy, very uncurved trend line. And then we got our third touch point back in February of 2016. And then at that point, that gave me a confirmation of where it potentially could be. The anchor point was a little bit iffy, but we ended up anchoring it to the December 6th low. And then we made that descending zone. And then overall on the weekly, we are making lower lows and lower highs. I do expect some level of a hold around this range because as we can see, obviously this was a massive panic, and there's a lot of things that happened with OPEC, and obviously there was a fundamental factor, and there always going to be as a fundamental factor if it's going to be a significant move. But it's happened before. Look back at 08 September. We saw a drop that was basically 68%. We consolidated around this range, and then this current drop is around 64%. And then we got a massive candle to the downside. Obviously, this weekly still has 1 day left, but the retracement all the way back up, as well as the daily candle closure with a strong push back to the upside, does show that there are buyers within this range that are going to purchase this zone here. Which is pretty good. And on the daily, on this current candle, we got 4 hours. So, it could hold. We don't exactly know. The Saudis could just keep on dumping the oil into the market, as well as Russia. They say that their production cost per barrel's below $20 or $15 for Russia, and for the Saudis, it's like 10 or 8 or something. Pretty crazy. So, they could make money for a lot longer, even if the prices do go lower, which is very scary for the States, Canada. I don't really know too much about Australia and their oil, if they have any, or how important that sector is for there. But obviously Canada has Alberta, which is highly impacted by the oil prices, as well as the United States with their shale oil, and both production methods are very costly compared to Russia and many of the countries in OPEC. So, yeah, there's some massive shifts going on where there's kind of only two options here. Either the government bails them out or they go bankrupt. And either one is either, if you go bankrupt, it's going to be basically the people that are within the company having to get paid by the government. But if it is a bailout, then it is basically the entire country paying for their bailout. So just depends on how valuable you think that company is to the country, basically. And, one person can't change anything, but it's a little bit frustrating sometimes in terms of, I guess, sometimes if you see United States buying back shares, and then when shit goes south, they expect the United States to bail them out. I don't think that's very fair. But, life's not always fair. So, not really going to talk about for more than 4 hour. We see that bump back up above the zone. But at the end of the day, it just hit that area. So, we're going to have to see if it's going to be able to consolidate around this zone. Now, going to the indexes as well as the dollar. First thing we're going to look at is just the daily for the S&P. We are consolidating around the $2,350, $2,400 level, right around there. Looking back at the weekly, we do see that was the low back in 24th of December, that the massive bearish push that we had. I think it was late December, and then at the start of January here, we started seeing some bullish momentum here. But we are seeing some level of support here. That's kind of looking like it's the last straw for a strong, significant level of support. If it breaks that, we're probably going to be hitting the 2016 high, which is around 2100. And then we got another minor level at around 1860. So we do have some horizontal levels of demand that we could be seeing, but obviously the massive momentum to the downside, especially with the lockdown just initiating. There's a lot of resistance ahead of us in terms of an economy, and it's going to be definitely challenging for a lot of corporations and companies. Some companies are, you can't say benefiting, but are seeing higher growth than average. Like just simple Walmart, Whole Food, any grocery store, or any company that is able to provide people with food and cleaning supplies, and the basic necessities are obviously getting sold out, and propane, and the things that are kind of for pandemic type situations are obviously selling, but for almost everyone in service, almost everything that isn't like survival / food shelter is really suffering. So we'll see how it goes. It's definitely a difficult time. So if you're facing challenges, I want to say we do have a Discord, and we have a discussion, and we have groups, and if you want to chat with us, that's not a problem. I know if you're like, I guess, in quarantine alone, it can get a little bit lonely, I'm sure. But there's not a whole lot more to talk about on the weekly here. It's pretty devastating in terms of the drop. In terms of how far we can go, sadly, I am pretty bearish for those who are holding their 401ks and long-term investments. In terms of a recession, I'm definitely I'm in the boat of yes, there's going to be either a major recession or even a depression, considering the economic difficulties that this virus is bringing to not just America, but globally. Like, China's slowly going to get out of it, hopefully, if the actual number of confirmed, let's go back here. Number of from recoveries increases, then their economy can go back on their feet, and that's a major supplier and manufacturer for the globe. But it's going to be really tough, and I think the government will have to just basically keep on bailing in people, so like paying people individually, or just keep on bailing out companies, because it's a very difficult time and there's massive liquidity issues. And I do think that the market's going to go lower. So people are asking, okay, how low can it go? Looking at 2000, .com bust, around, let's say 50% drop, 49.8, 50-ish% drop. The 08 financial crisis, 57% drop, right? So from the high here, we can see to our previous major structural resistance at around 1550 is around a 55-ish% drop. So it's not out of the ballpark. And if you are just extrapolating what happened in the two previous financial crashes or stock market crashes, 2000 .com crash as well as 2008 financial crash, they roughly cut their market cap in half. So looking at where we currently are now, if we're just extrapolating what happened in the two previous market crashes, we can see that we're around 29-30%. So then we have another 20-ish% to go to around 1550, and that would be a very significant level of support that we would be hitting. That's basically my analysis for long term. There's not basically anyone who can understand TA can understand that's a strong level of support, extrapolating what happened in the past and kind of projecting what could happen in the future. Now looking at the smaller time frames here, this is the 1 hour chart on the SPX. Let's just quickly talk about market flow, because what I kind of see is it's a descending wedge, so it's a little bit bullish. Obviously, it's a bearish momentum, so we're moving to the downside still. But at the end of the day, I think if we are able to break this descending zone, we will get a bounce, which is this descending zone right here. We see 1, 2, 3, 4, so we could get another test yet again. But now we kind of formed from this kind of zone where we were holding a descending zone and a horizontal, and it pushed down, but it's still holding it. But what I drew is this less descending trend line, which is now creating a kind of a descending wedge is what I'm looking at. And I think that if we do consolidate kind of like this and then form a potential low, I think we could get a little bit of a pop-up here as a pullback, maybe some shorts covering their positions, covering their profits. Remember, a short seller has to buy back the shares or coins that they borrowed to actually get into the short, so they need to buy back, hence the price will go up for a short squeeze because they need to get out, but that is a potential here. And that is kind of what I'm looking for. We made a massive move to the downside here. So just simply looking at impulse and correction pushes, just putting the mouse back here. Impulse and correction pushes. This is a major impulse move. This is a correction. What we're looking for in a correction is a series of higher lows that a trend line is holding. And then in a impulse push to the downside, you're looking for a potential descending zone that the price is holding. And if it breaks, you're looking for that potential correction, right? So in this case, we're in a downtrend. We're in a push to the downside. We're breaking major levels here on the daily and weekly. So we know we're in a push. Now, the market has to move in waves. Now, sometimes the market can just absolutely dump. Happened with Bitcoin, happened with silver, can happen with S&P, and that is kind of a black swan situation. I don't think it makes sense to try to trade a setup of unexpecting it to fall off an absolute cliff. I personally like market flow more, so I'm looking for a series of higher lows or higher highs, or lower lows and lower highs. For example, this is a high, this is a low, this is a lower high, this is a lower low, this is a lower high, and you're looking for these push, correction, push moves, right? So in this case, this is exactly what we're seeing, is a push right here, correction, push, and we're looking for that correction, and this is that descending trend line I'm kind of counting on. If it does hold here, if it does kind of see some higher lows, we're looking for a potential break in this. We're looking for a market structure to break the previous resistance, make a new high, potentially enter on the higher low, and then we're looking for somewhat of a pullback. We got our major resistance at 27. If it does break that, we got our another major resistance at 2,900, and those are going to be the two resistance we're going to be looking for. So just zooming back out on the 4 hour, what are the two potential resistances that we're seeing? The first one, let's just go back to the daily here. First one is going to be around 2,700 is where I'm going to be looking. If it does break our little consolidation zone. So 27 is the first one. If it does break 27, I think we could see 28. I think that's the first zone that I am able to see, but then also if we go to the 1 hour, that's not precise really, and I think I'd go there. So 27 is the first major resistance in my opinion, and then another major one is going to be 2850-ish, and that's going to be kind of where I have to change my bias, because if it goes above there, that's a pretty big V there, and you know, we could technically see 31, which would be all the way back here, which would be a very significant move back up. But at the end of the day, even if it takes the same amount of time to get back up, we're looking at like a week around, and just looking at the fundamentals, do you really think that the economy, that the stock market is looking bullish with the lockdown coming into place in the upcoming couple months here? I personally do not think so, or at least couple weeks. We have no idea how long it's going to be. So fundamentally speaking, it's looking very bearish. Structurally, made a push to the downside. I wouldn't be surprised if we got a pullback, but in terms of the overall trend, obviously we're making massive lower lows and lower highs, and we want to enter on the completion of the pullback, the completion of the exhaustion move, and that's what we're going to be waiting for. But yeah, I wouldn't really hesitate too much to enter short, because the momentum is very on your side here. But not really going to be an entrance I'm looking for at this point in time. I'm going to be patient with this one, and going to be waiting for a potential little bounce back up. We already see these higher lows coming into play, so that could be a potential. So we'll see where it leads. We will keep the Performante Premium, or I guess the Performante members, or anyone within the Discord, in the news, and I guess up to date with what's happening here. The last one we're going to talk about is going to be the dollar index. Massive move to the upside. Looking at the weekly, look how high it's been. It hasn't hit these over $100 ranges back in 2017, and then above that was 103 back in 2016, and then we don't really see the price hitting those highs until 2002 there, which we were at 120, very, very big move up there, and then it's looking like a big double bottom actually, which is actually pretty crazy because if you're looking at it from here, if we were able to break kind of this zone right here, that is a significant push for gold, or it's not for gold, for the US dollar, sorry. It'd be bad for gold actually if we did push back up here. So, you know, looking at the weekly, we've got another ascending trend line there. So we know that this is a major structural resistance at, let's say, 104, around there, because we see it was a resistance back here, and it was a resistance back here, and it was a resistance right here, and it was a support with the bearish flag before that massive move to the downside, pull back, and then push. So we know that that's a significant level, and obviously the next major significant level is around 120, but really do not think that we'll be going there. But you never know, 100%, you never know. You know, we are nearing a resistance right now. People are flooding into the US dollar. Basically, if you are trading gold, if you're trading oil, silver, any real commodity, it is calculated using the US dollar. So the US dollar is going to take a small piece of the pie for any transaction in a sense, right? Because they need to be a part of it. And because everyone's flooding out of the market with oil going down, gold, silver, crypto, basically every asset going down almost, you're getting a flood into the US dollar. And it's holding its value very well with basically everything else going down. So you're seeing a flood into the market of the US dollar. And there's still a liquidity issue where governments are still printing a lot of money, obviously, but the banks are having liquidity issues. They dropped the reserve, or the fractional reserve rate for banks to 0%. So now banks need to hold none of your money within the bank at any time. So then if you go and, let's say, ask for your money and they're having a liquidity issue or they just can't provide people with funds, they will just say, sorry, we cannot provide you with funds. Here's an IOU, but right now we can't do it, which is very scary. Looking at the different countries in the world, India has already, the fourth largest bank in India, has already stopped people from taking more than $700 out at a single point. I forget exactly what bank it is, but the RBI kind of told them you're having liquidity issues and you gotta basically only allow customers to pull $700 out US at a single time, which is scary, right? If you have a lot of money in a bank and you can't pull it out, it's kind of, you don't really have your money, do you? So something to consider. We were grinding up for a while, massive move up here, but yeah, like I said, we do have a resistance, so we'll see how it interacts around this zone. We have a lot of catalysts, a lot of things happening every single day, so every day is a new day. Every day is a unpredictable moment in a sense of not knowing what, I guess, Trump could say or what other politicians could say or what may drive the market in a sense. Like, for example, OPEC, like, who knew that there was going to be, well, some people can speculate, but that was definitely a surprise. Or even COVID-19, like, no one really saw that coming, so it's a crazy market. There's a lot of movement in terms of the assets that we're looking at. So, except for Bitcoin, moved up a lot today, but I'm currently waiting to see if it's able to break above the zone. I'm being pretty patient, and we'll talk about that very shortly here. So that is the overall market analysis for the commodities. Let's just go back to gold, as well as the indexes and the US dollar, and then not much change on silver and gold. The next thing we're going to be looking at is BTC. So we made a strong move back up here. So initially, this is what the plan was back at the beginning of the morning. We saw the price all the way down here. We were seeing some bullish pressure within the market, but we were saying that we noticed that there was a descending trend line that we initially used to trade this breakout after the reverse head and shoulders here. Left shoulder, head, right shoulder, breakout, boom, boom. That's what we got, that nice push there. So this trend line, this descending trend line, I just extended it, and we can see it's creating a nice little resistance zone. And then we can see a wick touch right here, and then you see another wick touch right here. That is creating another level of support. Also, looking back at historic time frames, historic price action, you can see it was a previous zone of support and resistance as well. So we know that there is going to be some interaction at this zone as a possibility and as a probability. So that's what we drew, and then we're currently at this zone right now. In terms of volume, there's actually not a lot of volume that came in on this candle compared to what we saw in previous time frames. Looking at, for example, what we saw on this candle, we saw basically almost the same amount of volume come in as our current candle, with not even close to as much movement. So the movement isn't as much compared to the effort that's required to move up. Little bit bearish, but at the end of the day, we still have 6 hours to go, and the transactions could just take place around this zone, could increase the volume, which it already looks like it is, to a point that's higher than this, which then makes more sense for the distance that's traveled and the effort that it took to get there. But we'll look at the smaller time frames. We know that there's a resistance there, but that's basically kind of the last resistance. If we break above this zone, we could see a pretty strong pullback here, but at the end of the day, I'm just still bearish. I just think there's going to be more pain before there's going to be a massive bullish push here. That's just too bearish, too much momentum to the downside. Too many people got hurt for people to assume that we're going to have a massive bullish push here. And so be it. If it does reverse and we're going to go to 10, we're going to go way up higher, there's going to be a lot more potential than potentially missing an entry here. For example, like it depends if you're dollar cost averaging or if you're a trader. As a trader, you're not going to be worried about missing out at the low because you're not looking for the low or high. You're looking for high probability setups that you have an edge on. You're not looking for that wick just down there to get you the lowest cost for one BTC as you possibly can. That's not your goal, right? If you were investing and you're looking for just one Bitcoin, you're looking for the lowest cost for one Bitcoin. But as a trader, you're looking for high probability setups that you have an edge trading in because you've back tested them and traded them so many times. And if it's not presenting you with opportunities in the market, you just have to sit tight, and it's very challenging as a trader, especially when you see different asset classes being very volatile, seeing great moves both upside and downside, and you sometimes have to sit there because as for us, I'm mainly a cryptocurrency trader and I do trade other assets, and I have been getting more involved in equities, but at the end of the day, I do like trading crypto. So, with the lack of volatility here, with the uncertainty and no real confidence from the buyers and sellers, we were holding off, and now we're getting a strong push here. So definitely good to see some momentum coming back into the market, and then we'll go into the smaller time frames, but not a whole lot more to talk about on the larger time frames. We see that was a really nice confluence zone on the CME futures. We didn't see a tremendous amount of buy volume come in, but this current candle has more buy volume than the previous candle, which is good. And we also broke the 6K zone on the CME futures, which is pretty significant as well. So it's not looking bad. I honestly can say that's not looking bad. If we're gonna hold above this zone, we're gonna look for a pullback around 59 to validate this zone as a new level of support. If we get that, that's looking a little bit more bullish because we'll talk about this descending trend line. I think that's where we could go next. We saw something similar when we had this consolidation as well. So we'll just get right into that, I think. We got a lot of room to go if we're just using this. So let's go on the 4 hour. Initially, I think what we're going to do is actually draw this zone in as well. So we have a nice confluence. I didn't put it on the 4-hour, but we should. And it's that zone right around there. Making sure the anchor point is well lined up, because that's very important. Right there. And then let's see how the rest of it looks here. We don't need it that far out. All right. So I think that's how I'm gonna draw it in right there. So now we go into the 4-hour. We know that that's our confluence zone. And then also what we're gonna incorporate, if it does break this zone, is this descending trend line right here. I know it's really far away, but we have already had 3 touches at this zone. So it's a potentially valid zone or potentially dependable zone. And that 4th touch will make it a valid zone. And I'll also put a projection like so. So, you know, if it does break above, that is our next possible zone. On the daily, you can't really see that area. I guess you can. It's this zone right here. So, you know, if it does break, that's our next zone. We would see some consolidation, and we got a confluent zone around 7,800, where these 3 lower highs connect with a descending trend line, and it's also in confluence with our $7,800 level of resistance that we broke out of for our reverse head and shoulders. So that's going to be the next area of potential short opportunity here if it does get around this range. But from where we are to that range, obviously, is a major move. It's 20%, so we got a ton of space to cover if it does push up here. But you know, we like to think a little bit ahead, and we like to be able to be prepared if it does actually move significantly. So right now, let's just talk about kind of the consolidation we're seeing right here, and then we'll just leave that up there in case we actually do see a bullish push. But at the end of the day, it's a little bit of a it's not going to be impossible, but it's just, to me, a little bit pretty high here still. And the momentum is still to the downside. We are seeing increasing buy volume here on the Bitfinex exchange, which is really good to see. But at the end of the day, we are hitting this resistance, and you know, I didn't long this 17%, because at the end of the day, I knew there was resistance. I knew the bearish momentum was to the downside, and hey, I could have made 20%. But at the end of the day, I'm just not ready to enter a trade that I don't have an edge in, basically. So let's look on the 1-hour chart. Got a rejection here. But other than that, let's just see if we can draw another level of confluence here. So this is that potential major ascending wedge pattern that I'm kind of looking for. Is this big short that I could potentially see coming here. So that's that resistance right there. And looking at a pullback, that looks not too far off. Now, we already talked about, yes, this is a zone of confluence, and we totally understand that. But with so much uncertainty, Bitcoin is probably one of the most uncertain assets for retail investors who don't truly understand the network value, I think. I'm still very bullish on BTC on the long-term time frame, but on the short-term time frame, I do think that speculators are going to be dumping Bitcoin and trying to get cash as much as they can during these uncertain times, is my personal opinion. So this is, you know, it depends on how aggressive you want to be. If you're really thinking it's a short, you could be looking for short opportunities around this zone because it's a zone of confluence. We have the descending zone right here. You have the ascending zone right here. The 1 hour does make it a little bit more valid. It looks a little bit more valid on the 1 hour. So let's just take a picture right here. So we see first it's a support twice. Then it turns into a resistance, major rejection, and now we're getting a little bit of a hesitancy to go up right now. We don't exactly know how it's going to turn out, but at this point in time, it does look like there's a little bit of sell pressure within the market. We do see less sell pressure coming in when the price is coming up to the zone, and we're seeing wicks. So This is the one candle with a wick. Let's just do it again. So this is the one candle with a wick, very, very strong candle with a wick, like so. And then the next candle is also another wick, which is pretty bearish. The price went from here all the way back down, and the price went from here all the way back down. And the next candle is now open right here, and it's a little bit bearish, going to the downside. So if it's able to push below the previous candle's open, that would be a bearish engulfing candle, and that'd be pretty bearish, and could be indication that we're going back down. So there's two ways to play this potential structure. You could be more aggressive, and you could get the potential resistance bounce, which is more aggressive because you are not waiting for a break to the downside. You're not waiting for the break of the ascending trend line. So that's going to be a little bit more of a risk for you. But then also you'll be able to get more reward because you'll be able to enter from here all the way to here before the more conservative entry would be. So you're getting a significant head start for a potential short if you are getting this entry here, but it comes with higher risk. Option 2 is going to be the more conservative approach. This would be with the anchor point on the 4 hour. It's very well respected, but you see 1, 2, 3. So then if the price does come down here, you're looking for a potential support, resistance. You're looking to enter on the completion of the exhaustion move, completion of the pullback. When it's coming back down, you're wanting to enter, so then that's going to be your first level take profit. It may hit here, it may go further down, we don't exactly know, but all we're looking for is this nice precise entry that we're looking for if it does create an ascending wedge pattern, and we're looking for the price to make a move down, and then a pullback, so then you get like this pattern. Maybe there was a little less low here, kind of like that, and you're kind of looking for something like that. So it's like this, that, kind of like that, right? So, and then you're looking for a possible entry around this zone for a short, and that's basically our goal. We'll see how it goes. I'm going to keep that on the 4 hour, and then I'm going to change the 1 hour a little bit. I was drawing some more ascending trend lines here, but I'm going to go on the 1 hour and just put this zone that we just drew in, which is just like here. Okay. We got this zone, and then we got the final zone, and then we got kind of the 58, which was the previous key level of resistance, which is going to be a key level of support. So if it breaks below that zone, we're definitely looking better for our ascending wedge potential short play. So we'll look for that. That's basically my analysis for Bitcoin. We're not going to go too much more into it. I basically kind of explained how my view is over the overall structure of the market on different time frames, going from larger time frames to smaller time frames, and not much more to say. It looks like we're getting that rejection there, so good thing that we did not long. Next thing that we're going to look at is going to be the Bitcoin supply and demand just on the Bitfinex exchange. I'm just going to get some coffee here. All right, so first things first, definitely seeing more buy pressure coming into the market, but in my opinion, this is going to be a pullback. Like we can see resistance, broke the resistance, new high. We're going to see if it's able to hold. This is the complete opposite. Push down. This is the previous support. Resistance, all along here. Resistance. New support. Going to potentially be a new level of resistance. And now it's going to come and trade all around down here. And now the shorts are going to come trade all around right here. Like last time, the shorts are trading all up here. And then the roles reversed in summer of 2019. And then the shorts were trading below this range. and then it was the polar opposite. We saw the shift. Let's just talk about the shift here. The shift was for the shorts was right here when we saw a strong level of support get broken psychologically, and then now the short sellers are not going to put on as much position or size because it looks like it's in a bullish push because the 14, it went from 10K to 14 like very, very parabolic, and it was a short squeeze, and a lot of the short sellers got out, and then we were below this range for a while, below it, right? That was a psychological shift for the supply, for the shorts. For the demand, what did we see? We saw a psychological zone right here. Resistance, resistance, resistance all along here. What did we get when we broke it? Massive moon, huge bullish push, right? We got a lot of volatility. This was the first push to the $9,100 zone. We got the retracement. This was the push to the 10.2, I think we hit. I don't exactly remember. 10.6, 10.5, 10 point, somewhere around there, yeah. So that was the second push, basically. And then now we got a pullback. And this is now that zone where we're shifting the psychology here from the resistance to a support back into a resistance. Exact same thing here. From a support to a resistance back into a support. I think that's what we're thinking. So this ascending wedge, if it does break to the downside, will just cement the bears having control, in my opinion. So we'll see how it goes, but not much more to say. If it does keep on going, we'll get the shorts to kind of pull back and the longs to enter in the market. We could get that shift, but at this point in time, it's not looking amazing. All right, so that is my analysis for Bitcoin. We're now going to go into the different alts that we're looking at here. Let's just quickly go to the SPY. Not a whole lot of movement for today, just a bit of chop. Actually, it's a lot of movement compared to most days, but in terms of like what we've seen in the past 2 weeks, it's a little bit more consolidating here, not a clear direction. And then gold and silver, not doing a whole lot just yet. Silver still breaking out. Actually, I'll look at silver first because it might be a front runner. Holding above the zone, but not really showing any clear signs that we are seeing a bullish push. And I will incorporate this trend line as well. So if it breaks below that zone, we could see some bearish momentum, and that would be in line with our BTC analysis as well. Gold is yet to break it, so silver could be a front runner. That was a fake out, and then it kind of traps the bulls, pushes back down, and then it would be an aggressive fall after $12 because I'm sure there's a lot of stop losses around this zone because we've held this zone as a nice level of support. So we'll see how it goes for the next few candles here, but got to bring all of the assets together and kind of build a relationship and a story between them all. All right, so the last couple are going to be these alts here. Going to get a little bit of coffee. All right, so the link trade that we were posting, this was it. Let's just go back to the 4 hour. Why were we even thinking about even potentially entering this? That's silly. Well, it's not really. Why is it? So we got a squeeze where we got lower highs and higher lows. Pretty simple squeeze. Zooming into the 1 hour, more well respected, or it's more well respected. I don't know if that's a word. More. I don't know if that's a word. Anyways, it is well respected. We see a high here, lower high, lower high, lower high, lower high, lower high, squeezing to the downside. We got an anchor point, higher low, higher low, higher low, higher low, apex, push up, pull back, validating previous resistance as a new level of support, as well as in confluence with the ascending support that we had before. In terms of volume, we're not actually getting a lot of volume when we're breaking above. We got a decent amount of buy volume for the initial break above the resistance, and then we saw a decreasing amount of volume. We did see less sell volume on the pullback down than on the bullish push. So overall, just looking at the volume, it is a little bit more volume accumulation, but it's not like we're seeing massive no supply candles at the zone, and we're actually seeing very little amount of buyers. So Didn't look too promising when we were pushing up, but once we broke the $1.98, $2 range, when we got our initial significant amount of volume here, that is when we got interested, and then we got our bullish push up. I was not awake. It was 2 in the morning when this happened, and then 3 in the morning and 4 in the morning, so I was not up yet. And then we got another push up, and that's kind of when I woke up here, around 5:30-ish. And then I've been looking at this price action pattern because the price is on an uptrend. It broke the squeeze. We're seeing strong volume accumulation. We're seeing breaking of resistances, holding of supports, higher lows, squeezing the price up. It's looking pretty favorable. The main key level of supply around $2.75-ish cents is far enough away that we're able to get a great risk-reward situation here compared to, for example, EOS, which already broke above, XRP right at the resistance, Ethereum right at the resistance, Link is not yet at the main resistance around $2.70 or 75 cents. So the potential there was greater compared to the other alts that are already at the resistances. So in terms of looking at the potential for different alts, Link looked like a better position in terms of the market structure, where the supply is, and how far we have until we could potentially see a strong level of sellers come in. And that's why I kind of looked at this more than another pair, for example, like XRP or BNB or even. So looking at what we saw right here, I did see a nice ascending trend line, and then a key level of horizontal resistance, creating an ascending triangle. We got a bullish push up, very, very strong level of buy pressure. We got a pull back down, and once we got this candle right here, let's just get this candle right here, the arrow, that is when I was telling the Discord, it's looking pretty good. I don't want to enter because of my analysis on BTC, and I was saying how you can sometimes lose trades or get trades, not be in trades when you want them to go your way because of your analysis on another pair. But in these volatile times, it makes sense for me to try to look at the main asset, the king of the market, which is Bitcoin, and Bitcoin's under resistance, right underneath the resistance. So to me, it kind of didn't make sense to long an alt if Bitcoin's right at a level of resistance, because if Bitcoin falls, you can basically bet every alt is going to fall at this point in time, because almost every single alt is going to have less confidence than Bitcoin. Bitcoin's going to have the most confidence of all the speculative assets within the cryptocurrency market. So if Bitcoin's falling, you can basically say you're sure that the rest of these alts that we're going to be looking at is falling. So it's very important to know where Bitcoin is when you are trading these alts. So that's basically Link. At this point, like I said, Bitcoin's at a resistance. We're not wanting to enter, but we are still well below our major resistance zone, which is $2.75. If it breaks above there and then Link is able to provide a nice price action pattern that we're able to trade, then that's great. We're looking to enter. But if Bitcoin is still below the $6,200, $6,300 level of resistance, we're still in the bias of this potential move to the downside that could occur. So we don't want to long right when BTC's at a resistance. So we're gonna stay patient here. And that said, we're basically gonna stay patient for the rest of these alts. But in that said, let's go to the next one, which is going to be Ethereum. So Ethereum had a very, very nice ascending zone here. Looking back at it, what a nice pattern. Push to the upside, pull back right around here. Now, I went to bed a little bit earlier, and then obviously this strong move to the upside was, I was asleep from around, let's see, around here, 22, around 10, so around here. Theoretically, that would have been a really, really good entry, but I was looking at that resistance, and this resistance, Entering here would not be market structure. This would be the recent high that we need to break. So if we entered here, market structure would not be validated because it hasn't broken the recent high. So that wouldn't have been a valid entry here. So we were looking, if it pushed above and if it pulled back and entered the 122 range right around here, that pullback would have been an entry that we would be looking for because it broke the market structure as well as the price action, as well as volume is increasing for the buyers. So that would have been a great entry, and that would have been a trade that we would have entered because it would have hit all our criteria. Fortunately, 4 in the morning, 4:30 in the morning, 3 in the morning. I'm not up at that time, so unfortunately we weren't able to get it. We got a strong push up, consolidation, previous resistance as a new level of support. I was up at the time. I did see the push, but like I said, just not wanting to enter on BTCs at a level of resistance. So today there was a pretty strong move. There was a 7% move on Ethereum. We didn't capture it. We could have. It was there in front of us, but we did not capture it. Kind of same thing that happened to Link here. As we can see, this is an ascending triangle. This price action pattern right here, and this is Link. Right? This is that ascending trend line, horizontal level of resistance, ascending trend line, horizontal level of resistance, push up, pull back, push up, pull back, and then now it exploded to the upside, and then potentially exploding to upside to around this zone here. That's why I'm still thinking about this zone, is Ethereum did that already. Link has not made that push yet. That's why I think Link is going to be the trade of for longs here, if we are looking for it. But like I said before, I'm just not convinced Bitcoin's going to move up. So that's my analysis for Ethereum. Let's just close that. Let's close that. In terms of where we are now, we're at an obvious major level of resistance. Looking at the daily, we can see pretty key level right around here where we are right now. Support, resistance, support, and we're now at the same level as a potential level of resistance. So longing now I think is really not a good idea. Unless you see the price break above this zone and start to enter to new highs, but it hasn't really made a new high yet. We still got 5 hours left on this bullish candle, so we're going to be patient with this trade. There's not really an ascending zone really to go off of at this point in time, because this zone was the squeeze, which was right here. This was that actual squeeze that we were looking at right there, which is pretty good, right? But at the end of the day, we're hitting that resistance, so we're gonna wait here. It's pretty crazy to see cryptos react to the news, because gold isn't really moving up today, silver isn't really moving up today, S&P is not really doing much today. It's consolidating, and crypto is actually moving up. So it's interesting to see. Obviously, cryptos have not been around for any real recession or any market crash or correction in a major way anyway, so we will see how it reacts, and it's looking pretty favorable right now. Obviously we got that dump, but we're seeing some bullish action here. So that's my analysis for those. XRP, very simple. Key level of resistance at around 0.166, and we got an ascending zone. So we got an ascending triangle. Not much more to talk about. Very simple. Not broken the zone. We don't do anything. And I'm sure everyone understands how to trade these if it does play out. And if not, we'll go over it within the Performante Premium if it does break out. If not, if you're wanting to know beforehand, we made a video specifically exactly how to trade this pattern, both to the upside and to the downside. EOS shot up significantly, breaking the high. So that's pretty important to me. Breaking the recent high, which is going to be right here. Especially the candle closures on the 1 hour, that's definitely significant. And now we're getting a hold and then now a potential respect of our previous resistance. So if we are looking to long, EOS is the one that we're going to be looking to long because of the structure breaking already. So let's zoom out here and look back at the larger time frames. Let's look all the way back at the daily. So yep, we broke the resistance right here. We can see very strong resistance back all the way in 2018, 2019. Resistance support. We got a nice little squeeze here. Boom, big pop up. And then we made our massive move to the upside. And now we got another potential squeeze here. So it's kind of like this. It's very similar actually. So this is what we're looking for. You might not see exactly. So do you see this huge move, and then you got to pop up, huge move, and you got to pop up. That's kind of what I'm seeing right here. Is it might be the low here. We don't exactly know. We've seen this low get tested multiple times. Obviously, if this is the low for EOS, it's going to be the low for all alts basically, because it's not like EOS will go up and all alts will go down. That's not how it goes. The crypto market moves not in exact unison, but they'll move in the same wave. They won't follow the exact same direction. Some may break. They're in the same ocean, but they might not be in the same wave. Some may break beforehand. Some may break after. There may be some front runners, but at the end of the day, it's in the same ocean, which is a market. So like they're made up of the same stuff, and they'll kind of move in similar direction, but it might be the exact same way. If that kind of makes sense. So let's talk about what happened here. Major aggressive move to the downside. Very aggressive, turns less aggressive, turns consolidation, turns strong bullish push up. That's exactly what I see here, right? There's different markets. Strong aggressive push to the downside, consolidation to the downside, still making lower lows and lower highs. Consolidation, this is the accumulation phase. Markup, bullish push, right? And then we can see something like that potentially happen right here within EOS. If it does kind of start to do the same thing, we get aggressive push. We might see now a little bit of consolidation, a little bit less aggression to the lower lows and lower highs. That could mean that we're going to get a move to the upside here, kind of testing these zones for resistance. And then we could see a maybe less of a lower high, maybe a lower low. Kind of like here, kind of like here. So we're getting a little bit of a squeeze like this. We don't exactly know, but this is kind of what we're looking for the completion of the bearish push. I think EOS actually shows it very, very well. At the end of the day, in my view, we're not looking for a reversal like that. I'm not looking to enter anything like that. I'm looking for this. Very nice market structure. So right now, we're still in the bearish push at the end of the day. But we broke the recent high, so EOS is kind of the only thing I'm looking at with the bullish lens. If it does close above that zone, which it has on the 1 hour, let's see on the 4 hour. But and we see lots of volume come into the market, which is great. So there's a lot of indications that could mean that we are going to see it continue. But I personally want to be a little bit more patient and wait for the pullback, wait for BTC, because I'd rather not be in a trade and wish I was in a trade than to be in a trade and I wish I was really not in that trade. And I think that's very clear with how the markets are acting right now. Is a lot of people wish that they were not investing in the markets, and sometimes it's better to kind of wait for your prime opportunity, because I think Bitcoin and cryptocurrencies will see their day where they're going to have massive price appreciation, and that will be the time to be very, very aggressive. But in my opinion, this isn't really the time to be super aggressive. It's a time to be kind of conservative, watch the market, be patient for the consolidation, because we're in a deflationary panic stage and we're waiting for kind of the dust to settle before the phoenix of cryptocurrencies and gold and silver will emerge from the ashes, is our speculation. So EOS is kind of the only thing that I'm looking at for a potential long. Just looking at a potential ascending resistance. You know, kind of looks like we broke that too, to be completely honest. Kind of does look like we did. Yeah, honestly, I don't really see an ace. That's not really going to hold anything. Yeah, so EOS is definitely the long opportunity here in my view for a potential if we are looking. Let's just look at the 5-minute. Got a nice little consolidation just sideways, not really forming anything. But yeah, EOS is basically the only real long I'm looking for at this point in time. Nice little resistance here. And also we can also create a confluence because it was probably somewhere around here. We can move it a little higher to a resistance or support, but at the end of the day, the price will kind of tell us that there's going to be some level of hesitation, probably somewhere around here. Unless we can draw not really anything there. So yeah, I'm pretty happy with where our zones are. We'll see where this is. I think I'll make it a little bit bigger and just incorporate the entire area, and then we'll see if the price is able to get to that zone. But not much more on EOS. I'm pretty happy with where it currently is for a long, and it's the only real trade that I'm looking for a potential entry at this point in time for an alt. In terms of shorts, BTC is definitely my main. But, you know, if it starts to break above, EOS is going to be a potential play here that I'm going to be looking at. But we'll see how it goes. The last pair we're going to be looking at is BNB. We can see this major supply area around $14 to $13. Let's break it down on the daily. Why is this such an important zone? Let's zoom all the way back. You can even tell on the weekly. Very, very important. We can see initially it was not a significant zone, but we can see bounce. So this is going to be a major area where there's going to be bullish pressure within the market. And then on the daily, we can see initially there, and that's why it's such a wide zone. Initially, we hit that zone, and then we pushed down to form that lower area of support. And then we can see that was the initial base of our consolidation before our massive move to the upside. Zooming back even further, there's a lot of mess here. Not great to see, but then it was a level of support and then resistance, support, resistance. So very messy during April of 2018 until July of 2018, that kind of summer there. But as time went on, as we got into 2019, it does show that there is a pretty important level of support, which is going to now turn into a new nice level of resistance. So we'll see how it goes. Let's draw in a potential trend line that we can see here. I think that might be it right there for a potential. And that's kind of all I'm going to draw in for BNB here. We have another ascending trend line that we could draw in on the 1 hour time frame, I'm sure, like so. So this is also going to be a potential short play if it does break this zone. So a lot of these patterns are looking pretty similar to each other, which is great because some will be front runners, some will be sympathy plays. So a front runner would be a break before the rest of the market moves, and then a sympathy play would be kind of when the rest of the market moves, and then the final pair that is yet to move you'd be entering because you have a high probability because the rest of the market is already doing what you're anticipating in the trade that you're going to be looking to trade to do. So, you know, we're looking for a break here, and that's basically the trade. We're not going to go dive too much into it. We got a resistance at around $13. We got to keep that in mind. And if we're trading within this range, we're not looking for really anything. The only time we're going to be looking to enter if it breaks this zone, we're going to be looking for some level of a pullback, validating a previous level of support as a new level of resistance, and then we're going to enter before the push to the downside. So that's basically the trade for BNB. It's looking like a good opportunity. Polar opposite for EOS. Obviously, but that's basically the only alts that I'll be looking at in terms of shorts, and then Bitcoin will be the other short that I'll be looking at if it does come into play here. But for now, we don't really have too much right now going on. Gold and silver are just kind of remain stationary. S&P is actually moving up a little bit here, breaking that little resistance. We'll see how it goes for the rest of the day. But that is basically the analysis. Thank you very much for everyone who has been watching. Around an hour and 20 minutes, basically, almost. For any questions here, what do you use to buy and sell? For cryptocurrencies, I use Binance. For equities, Questrade's a good one. Wealthsimple is a good one. Wealthsimple is not really meant for day trading, but you can. I use it for swing trading, and it's not a problem. But if you are shorter term day trading, it makes sense to use Questrade because you are able to purchase services for order books and time and sales. Or I guess it's called a level 2, but it's basically the same thing. And you're able to link it to other charting platforms, whereas for the trading I'm doing on Wealthsimple, all I'm doing is just using leveraged ETFs or inverse leveraged ETFs, trading the S&P 500, gold, and silver. And I'm getting exposure for both long and short for the commodities, gold and silver, as well as indexes with the S&P. And that's basically all I'm doing. And then for cryptos, I'm just using Binance. So hopefully that answered your question. Hopefully that this video was able to provide you with some level of value or education or information. Or having a second opinion is never really a bad thing. And like I said before, if you are getting affected by this COVID-19 virus, if you are not really bored, but like if you want to learn stuff, if you want to make use of your time, if you want to be a part of the community that is able to kind of have a discussion that's more than the simple day-to-day topics, like talking about more economic swings or entrepreneurial endeavors or trading, crypto, stocks, forex, options, building a business, apps. I don't really know how to code, but there's a lot of people within our Discord that know how to code and program and that whole side of it as well. So definitely check it out if you're interested. And I thank you very much for watching. And until next time, happy trading, everyone.